Joining us now to talk more about everything going on in the markets is Nick Maroutsos, co-head of global bonds at Janus Henderson. Nick, thanks for joining us. Let's start with your area and something that has not gotten a lot of discussion, at least in my view, in the last few weeks, which is the bond curve, right? I mean, we continue to see inversions all across the Treasury curve right now. That was a big concern of markets back in the winter, signaling a recession. What are you seeing happening right now in the Treasury space? What do you think it's saying about the future path of the U.S. and the global economy?
Absolutely. So the inversion of the yield curve is something that's very topical. But the problem is, I think that for all intent and purposes, this is not going to lead necessarily to a recession. What we've seen is a major flight to quality as a result of trade issues, data issues, Fed issues, whether it's the pivot or them moving to pricing and rate cuts. But from our perspective, we do not think that that generally is going to signal that more inversion is going to happen and it's going to lead to a full-blown recession.
So, Nick, when you look at markets right now, what to you feels like the most pressing topic that is driving the action that you're seeing, whether it's in equities, whether it's in credit? You know, is it the trade war? Is it concerns about recession? Is it a flows-based kind of move that we're seeing?
No, our view is that it's mainly as a result of the Fed. And it's also a result of what have you done for me lately when you think about what's going on in the market. Look what happened over the weekend. We had a situation where there was renewed tensions between Europe and Italy, a stalemate in Brexit. In Europe, the center-left and the center-right parties both lost ground. They're no longer able to form a grand coalition. In the UK, there's a lot of heightened risk there as a result of the Labour and Conservative parties losing seats to the Brexit party. So all this is showing that we're going to have a more fragmented Europe. It'll make the agenda and policy setting harder, as well as Brexit negotiations less clear. You throw in the fact that you have a sort of an ambivalent Fed who's trying to sort of balance both dovish and hawkish stance while also managing equity markets that are falling. And you have a broader situation where there's a risk-off tone in the market, and much of that is being felt in the debt space.
Nick, let's talk about some of the IPOs we've seen. I know we're talking about market uncertainty here, but some of these companies, which maybe they were going to end up not going in 2019, and then they did finally. We got Lyft, we got Uber, we got Pinterest. And especially as we talk about what's going on in Europe and outside the U.S., you wonder if we'll see some of those Chinese companies that want to do U.S. IPOs pull back a little bit. Of course, we're waiting on a company like Ant Financial. But what do you make of how those tech unicorns that have finally gone public are doing, and how do you expect the sort of unicorn parade to continue in 2019 and 2020?
Well, our view is purely simple. I mean, if the equity markets continue to fall, then there's likely not going to be IPOs or, I guess, an influx of IPOs. Now, the equity market really is in our domain, but we obviously watch the tail of the tape to sort of get a gauge on the fixed income market. But you're absolutely right. You know, the likes of Uber and Lyft going public, I think it was sort of a mad dash to get things done while equities were still doing okay. Now that equity markets have pulled back, I think, like I said, you're going to get a situation where there's less IPOs coming to the market, and it's going to be largely dictated by sort of the relevant tone of the equity space.
Mm-hmm. And Nick, quickly, if I could just ask, what's the most common question you're getting from your clients right now? What seems to be top of mind for them at this time?
The major topic is really around the recession and whether or not we're going to have a recession. You had a situation where the Fed in October was very hawkish, and then they basically changed their tone entirely only as a result of equity markets falling. Now, that sort of put in place the Fed pivot or the Fed put, where the Fed is basically there to backstop markets. And, you know, I think what it's led to is a situation where markets getting a little jittery. They're starting to price in rate cuts. They're looking around the globe and saying, well, look, things aren't really looking that good globally. You have a situation where Europe is stumbling. You have the UK in a bit of disarray. You have other central banks that are looking to cut interest rates. So the reality is saying, is the Fed really going to cut rates at some point this year, or are they going to wait till next year? Are we on hold, or are they going to potentially look to try to resume their rate hiking plan that they sort of had in place mid last year?
All right, Nick Maroutsos with Janus Henderson, thanks so much for joining us.
Thank you.